Hello, and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is October 22nd, 2025, and we are taking a deep dive into one of the market's most important stocks, Microsoft, ticker Microsoft. There is a ton of news swirling around the company, especially with its crucial earnings report just a week away on October 29th. On one hand, the bullish sentiment is extremely strong. Bank of America, for example, is maintaining a buy rating with a staggering price target of $640, citing momentum in Microsoft's Azure cloud business and strong demand for AI and security services. Analysts are pointing to increased capital expenditure as a sign of durable, long-term demand for their infrastructure. The AI narrative, driven by products like Copilot, continues to fuel expectations of massive future revenue. However, there's a growing counter-narrative focused on valuation. Sources like The Motley Fool and Simply Wall ST are flagging that the stock is not cheap, trading at a high price-to-earnings ratio of over 38. In fact, one popular valuation model cited by Simply Wall ST suggests a fair value of only $360, labeling the stock as significantly overvalued at its current price above $500. This creates a fascinating tug-of-war in market sentiment. Are the bullish growth prospects of AI enough to justify the premium, or are the valuation concerns a warning sign for investors? That's exactly what we're here to investigate by looking at what the charts are telling us. Let's start with the daily chart to get a long-term perspective of the price action over the last year and a half. As you can see, Microsoft has been in a powerful uptrend, making a series of higher highs and higher lows. This trend clearly reflects the market's optimism about the company's AI-driven growth we just discussed. However, it has not been a straight line up. There have been several significant pullbacks along the way. The stock reached its all-time high of about $555 on July 31st of this year, which was likely tied to an earnings release. Notice the massive gap down immediately after that high, a classic sell the news reaction where the price fell from over $550 to the low $530s. That all-time high at $555 is now the most critical long-term resistance level to watch. Following that drop, the price found support around the $504 level in August and spent several weeks consolidating. This $500 to $510 zone has since become a very important area of support. Looking further back, we can see another key area in March and April of this year, where the stock pulled back hard before finding a bottom around the $380 mark. The subsequent recovery was explosive, with a huge upward gap at the end of April after another earnings report. That gap, between roughly $395 and $425, represents a major underlying support zone. These historical levels are crucial because they tell us where buyers have consistently stepped in before. Now let's zoom in on the more recent price action since that major drop in late July. I'm filtering the daily chart to show everything from August 1st onwards. After bouncing off the $504 low, the stock has been in a steady, grinding recovery. It successfully climbed back to test the $530 area in early October but was rejected. This establishes a clear, short-term resistance level at $530. For the past few weeks, the price has been trading in a tightening range, mostly between $510 and the high teens. The stock closed yesterday, October 21st, at $517.66, right in the middle of this consolidation zone. This coiling price action is typical behavior ahead of a major catalyst like an earnings report. The market is essentially in a holding pattern, waiting for new information to justify the next big move. A decisive break above $530 would be very bullish, while a break below the $510 support would signal short-term weakness. To get an even clearer picture of this recent consolidation, let's switch to the 1-hour chart, looking at the data from the first half of October. Here you can see the strong rally up to that $530 resistance level on October 6th. Notice how the price failed to hold those highs and quickly retreated over the next few days. It then found its footing around the $510 mark on October 10th. Since then, the price has been chopping back and forth, building a range of support and resistance. This hourly view shows us that buyers are defending the $510 level, but sellers are still active as the price approaches $520 and above. This confirms the indecision we saw on the daily chart, highlighting the importance of the upcoming earnings. A breakout from this range on high volume will likely dictate the trend for the remainder of the year. Finally, let's drill down to the 15-minute chart to analyze the price action from the last few trading sessions, from October 17th through the 21st. This intraday view shows the choppy, sideways to upward drift we've been experiencing. We can see a pattern of small rallies followed by minor pullbacks, with neither buyers nor sellers taking firm control. On October 20th, the price made a push towards $518.70, but failed to hold, and yesterday saw more of this tight, range-bound trading. This is the market winding up like a spring. Traders are clearly hesitant to place large directional bets just 1 week before the earnings announcement. The key takeaway here is that short-term noise is high and conviction is low. It would be wise to be cautious of fake breakouts until the earnings results are released. So, let's bring it all together and go back to our daily chart for a final summary and outlook. The fundamental picture is a battle between a powerful AI growth story and legitimate valuation concerns. The technical picture shows a strong long-term uptrend that is currently consolidating ahead of a major catalyst. Let's recap the key price levels you absolutely need to have on your radar. Major resistance is at $530, the early October high, and above that, the all-time high of $555. Key support lies at $510, the bottom of the current consolidation range, followed by the psychological and technical level of $500. Now for our potential scenarios. I believe the bullish scenario has a higher probability, perhaps around 70%, given the strong institutional sentiment and AI momentum. If Microsoft delivers strong earnings and, more importantly, provides very optimistic forward guidance on October 29th, we could see a powerful breakout above $530. The first target would be a retest of the $555 all-time high. If that level is breached, a longer-term move towards the $600s becomes highly probable. On the other hand, the bearish scenario, which I'd place at a 30% probability, would be triggered by disappointing earnings or weak guidance. In this case, the stock's high valuation would become the market's primary focus. A break below the $510 support level could quickly lead to a test of $500. If the selling pressure is intense, a fall towards the next major support zone around $470 is not out of the question. The most important thing to watch for is the earnings report next week. Pay close attention to the Azure growth rate and any commentary on the monetization and adoption of Copilot. This will set the tone for Microsoft stock for the rest of 2025 and into 2026. Thank you for watching this analysis on Explain the Charts. Please remember, this is not financial advice and is for educational and entertainment purposes only. You should always conduct your own research and make investment decisions based on your own individual circumstances. Don't forget to like and subscribe for more in-depth chart breakdowns.